Good morning. Welcome back to the live room. Let me just unmute the microphone on the main platform. That would make life a little bit better. Spinning thing, spinning thing, spinning thing. Any second now. There we go. Now we're up and running. Good morning, live room members. Welcome back to the live room. How's everyone doing today? OG says, how's the voice? It seems not 100% OG, but good enough to play. Good enough to play. How are you guys doing today? Good. Also, welcome to all those on social media land. Again, broadcasting the first trade, my top trade of the day over on YouTube and TradingView and Twitter and somewhere else, I'm sure. But welcome wherever you guys are joining at. Thank you for joining. My trade of the day today is actually the same one as yesterday, but we're not going to repeat it because that wouldn't be pointless, or that wouldn't really serve a good purpose. I'm going to kind of use a secondary trading opportunity of the day, which is also a follow-up on one we looked at yesterday. So we're going to look at Bitcoin to start off things and talk about a re-entry or a re-evaluation of yesterday's trading ideas. However, I want to start off sharing a question that I got, and I think it's a good learning experience for newer traders. So I got this question with someone that was looking to learn how to trade or trading strategies and all that fun stuff. And he said, Akil, I have some questions before I enroll with you. And I want to know how you guys would answer this. Two of the questions were, how many pips will I make weekly? And what will my profit percentage be? Now, put yourself in the shoes of an educator. How do you answer that question? Now, it is a dumb question. Not saying the person that asked it is dumb, not by any means, right? Unfortunately, it's something that many of us are brainwashed into asking. We're very results driven, and we don't understand necessarily what makes up trading. So it's not a dumb question as far as the person asking it, but it is one of those unanswerable questions. One of those questions that me and Jason, we always kind of get irritated over because there's no real way to answer it, and we end up writing like a 5-paragraph chapter in order to get it across. But Orsi says it's a question that's hard to answer. It really depends on your testing. Not Damien says catching the live stream is a winning trade. Thank you, Damien. Great to hear that. Store says statistically none and as negative as you want, and your personality. So I think we're all under the opinion that there's no real way to answer that question. The only real way to answer that question is the only real way to have the best prediction of what your system can potentially make weekly or every 2 weeks, whatever it was weekly, and your profit percentage is by doing the back testing and looking at your back test results. Even then, right, is back testing necessarily a say all be all as far as what your profitability will be? No. Why? Why? What is the biggest separator between back testing and live performance? What is the main reason that most traders fail? There's one little thing we have to worry about. Many of us skip over this because, we're young, we're dumb, we don't care. Trading psychology, right? There is a massive difference between your back testing results, I would even say your demo trading results, and your live trading results. And that is a little thing called trading psychology. It's only the most important thing in trading that you need to master. So even after you've done your back testing, right, it's hard to make that prediction until you're actually doing it because there is going to be that room for error. But in general, what are some things we need to think about or look at, or what are some differences that are going to be there in a trader's win percentage? So let's say Amari, let's say Stuart, you guys are trading the exact same strategy. You guys are both doing the daily chore, right? Will you guys have the exact same results? let's not even say daily chore. Let's just say you're a classic pullback trade or structured trade, support and resistance. No. Why will your results vary? And we'll get into Bitcoin in a little bit. I thought this was an important point. It's my show. I can do what I want. Also, it's a perfect example for those tuning in live that think this is just like a signal service or whatever like that. No, it's much more than that. This is a place where we have some conversations that you really need to hear about trading. I do not use any algorithms to trade for me. No. All me, baby. It's all me, Damien. So some things that are going to be different between those two traders, even if they're trading the exact same strategy, is one, their eyes, right? Different perspective of the market. That's the main thing. What may be a double bottom for Stuart may not be a double bottom for Orsi or Amarion. Risk appetite, right? Stuart may be okay. I had a conversation with Stuart this morning. He was looking at the pound dollar trade, another pound dollar trade from yesterday. And he was talking about his risk appetite on this trade. And he said, hey, I can't take it unless it ends up being a 1-to-1. Right? Well, what if Stuart requires a 1-to-1, but let's say Amarion doesn't? Well, they can involve themselves in two different trades. What if Stuart requires a 2-to-1 risk reward? Why Amarion doesn't? Amari, I'm sorry, I'm thinking about the Omnicorn, which we joke we call the Amarion, and whatever. Sorry about that. Right? So risk appetite. What are some bigger things? Mikkel says rules over on YouTube. Rules, yep, specific rules. Right? Portfolio, the pairs they trade, right? Stuart may trade pound dollar, pound yen, euro yen. Amari may trade dollar Canada, Aussie dollar, New Zealand dollar. Pairs, time frames, time of day, right? We can go on and go on and go on. So there are so many differences, and this is why trading is so unique. And the message that is important for newer traders is to understand, because Jason and myself, we're going to talk about scammers later on the Trader Coffee Break. It returns after like a month hiatus of both of us being sick, 4-day free workshop, and all that fun stuff, right? And we're going to talk about scammers. And this is why I believe if anyone approaches you and say, hey, this is what you'll make trading this system, false, run. Because how could they know? How could they know? Unless it is a completely automated system where it's a plug-and-play for you in the background. And even then, right, we all know how that goes. You just can't plug and play, right? You got to manage it. How can they know? Yep. So again, I want to get that question across because we work with a lot of newer traders every day, and a certain group, we know you have the right mindset, but there are still many traders out there that just don't know. And it's not a naiveness. You don't know until someone tells you. So hopefully this is a place where someone has now told you. All right. After 8 minutes of ranting, let's get to Bitcoin. We're going to follow up on Bitcoin and talk about a secondary opportunity to get involved. Now, we had a very good conversation on Bitcoin yesterday. If you guys didn't catch the full live room session, make sure you watch the recording. I actually turned it into a podcast as well. But I absolutely love the conversation we had about the differences in how professional traders versus hobby traders think. Did you guys enjoy that? I had the cool little punchline. One of us reads the market, the other reads the news, blah, 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 right? I mean, it was perfect. It was a rare, great moment by Akil. I'm tapping myself on the back, right? But I want to revisit this because what we talked about on Bitcoin, if you weren't here, if you missed it, we talked about a pullback opportunity where if you're someone that's looking for a pullback on Bitcoin, an opportunity to buy, we recently had that. You can see this big candle on the weekly. And we got a nice rejection down here, which is a good sign of buying pressure. And on Monday, when we looked at Bitcoin, we said a good reason for entry would be after our inside bar right here, this little small guy, and then looking for a higher high, higher close, which we got 2 days ago, right? Now, we measured some things out. We talked about risk reward, right? Again, different ways to approach this. Obviously, if you're more of an investor, buy and hold, you're not really too concerned with this risk reward because you're holding for an extension. If you're someone who is strictly a trader looking for, let's say, a specific zone, you're probably looking at a risk about right here to put yourself in the safest position below the pullback with an initial target at a retest of previous structure highs. And I thought originally eyeball, and I was like, oh, well, it's going to be a horrible risk reward. It actually isn't too bad. You're going to be able to get over that 1-to-1. But now the question is, well, what if you're not interested in this type of risk reward? What if you don't want that much risk? What if you're not a trader on the daily chart? Right? What if you want another reason to get involved? And this goes down to that 3-lane highway example we talked about, where you got the middle lane as your trading time frame. You have a slow lane on one side, depending on where you're located at. If you're normal, like here in the US, or if you're weird, like over in the UK, that slow lane is going to be on your left. Your fast lane is going to be on your right. Here in the US, that slow lane is going to be on your right. Your fast lane is going to be on the left. But we talked about using all those lanes together as a way to look at the market from all different perspectives, basically from a neutral perspective, a slower perspective, which would be your higher time frame, and then your lower time frame, which would be your faster lane, kind of your lower time frame you would dial down for entries. So if we go down to a 4-hour, right, you can see what has recently happened here after our little pullback. We had our pullback. We had our little V reversal down here. What happened after that? Not a 2618, no, because technically we didn't have a double bottom, but 2618 type. Now remember, our lowest close we're seeing, this is why it confuses, right? The lowest close is actually going to be this little candle after this wick candle. That's why we didn't get double bottom. But yeah, we had a rally up. We had a little reversal, and then we broke this structure to the upside. And now we're pulling back into this level, right? So we can look at this as being a pullback, right? A really short and short-term one, pullback into this previous level of structure, which would offer another trading opportunity without the risk of being, without you necessarily needing to take the risk of being below this wick, right? So if we go one more time frame down to the hourly, should make a little bit more sense here. So we have a few things happening, right? So again, here's our lows. Here's our big buyish rejection. We come up, we consolidate, we create a little bit of a structure shelf right here. We then retrace, right? We then extend, violating our previous structure highs, right? And you can restart your IPDE process off a lower time frame. We then put in a complex pullback into this level, right? If we take this and put it here, and then I copy and paste it, and then we put it here. Got a few things happening there. We got a complex pullback right back into this previous level of structure. You guys know I love these levels, right? These big candles, I call them the elephant candles. I love the consolidation from a structure perspective. I love the consolidation right before the elephant candle, right? So this little candle right before it. We can also add on fibs as we do every day in a boring fashion, because, you know, we do the same thing every day as far as analysis goes here. Fibonacci extension, swing high to swing low. Hard to see, but I'll delete this P&L. Oh, no. Hold on. There we go. We have a 1618 Fibonacci retracement down there. We can also take a Fibonacci or extension, excuse me, down there. We can take a Fibonacci retracement from this swing low to the swing high up here. And you can see we have a 618 as well. So we have the golden means lining up, the 618, which is the technically the inverse golden mean, and the 1618, which is the golden mean, the two magical voodoo fibs lining up in the same area with your AB equals CD pattern with a minor level of structure. So if you're adding up your CTS score, that would be it. And then look, we're repeating what we got right here. Yes, the RSI as well, right? RSI, as Jagger mentioned, we got two things. Thanks, I forgot. I was going to forget to do that. I skipped right over it because it's kind of second nature. What do we have happening on the RSI? I'm going to thicken this up because I had to delete it this morning. But what do we have happening here on the RSI? Oversold, we have divergence. What type of divergence? Because it does matter what type of divergence we have. What type of divergence? Not bullish divergence. Nope. We're going to have hidden divergence. Yep. So again, we look at our two last lows, or what we would project to be our low right here, right? Boom, boom. We can all agree higher lows, correct? What do we have on the RSI here? Lower lows, right? So that's a positive sign for continuation. We almost have a structure swap as well, which is a personal thing of mine. So you have some RSI confluence. And currently, as we go down to the kind of the lowest of perspectives, or the most fundamental of things, right? Reading a actual candlestick, what is happening currently with this candlestick? Right? We have a high momentum candlestick heading down into our previous level of structure, right? We have a doji candle, right? Massive volume on this doji candle, by the way. Again, if you want to compare candle to candle when you're doing volume spread analysis, look at this doji candle right here. Small range. We can definitely agree small range in the previous candle. Much lower volume, very high volume, lower volume than the bigger candle, right? So we can tell there's some activity down here, right? Would you guys agree? If the volume's up, people are interested, right? If people are not interested, there wouldn't be any volume, right? So there's activity down here, right? We could tell that by the volume. Now, the question always is, well, where's the activity at? Is it on the bullish side or the bearish side? Based on the previous candle, what would you say on this doji candle? I would say neutral. Neutral. If you had to lean a little bit one way, you'd lean a little bit bullish. The whip to the tail to the downside's a little bit larger than the tail to the upside. But I would call it a neutral. It's not it's more of a classic doji. Now, if we look at the current candle Orsi, now we're leaning more bullish, right? Because where is and we got 12 minutes, obviously. But where is that candle looking to close at? If it were to close right now, again, 12 minutes is a long time, trust me. But we're currently trading in the upper third. So that would be more bullish. Yep. No need to apologize. Nope. I can barely see these charts, and it's right in front of me. I can imagine how you guys feel looking at it through a screen share, which isn't always the sharpest. Yeah. So no need to apologize. You've got your street cred is built up enough where I know you're not going to do anything dumb. Don't worry. So this is where you'd be looking for your first reason for entry. Now, I would still be interested, again, anywhere in the zone. But if you're looking for a short-term buy or a lower time frame buy here on Bitcoin, wait for your reason for entry. Again, a bullish candle would be a positive sign. A higher high, higher close would be a very positive sign. This gives you an opportunity to enter that same type of trade on a lower time frame, a little bit less risk, and still continue to trade it to the upside. Now, again, targets is going to be up to you, whether you want to be conservative and use this time frame structure, or you just want to shoot for the bigger target levels, right? That's going to be a personal decision. But a secondary or a different look at the buy that we looked at on Bitcoin yesterday. Any questions? Any questions? To the moon. I saw an article yesterday about, or I saw a post yesterday about it was a sports guy talking about Bitcoin, and it's like, it's funny hearing the public talk about it. Let's put it like that. All right, perfect. All right, so that's trade number one. We're going to continue on our day. I'm going to shut down the live streams. Thank you guys for joining over on YouTube and Twitter and TradingView and wherever else. We'll see you guys tomorrow. Any place in particular you guys want to head next here in the live room. Canada Yen with another one